guys, looking back, we're going to plan the trades for the new week of June. I have this pair over here, the pound and the Australian dollars. Okay, I can first let's look at the higher time frame, which is the H4. I can see that the highs they are getting lower, which represent the major move, major trend is bearish. Okay, but if we look at the recent points around this area, we have a small structure of the bullish after we witnessing the price has established a support over here, and then it break out the accumulation. Okay, and it make a bullish. You can see that a break and then a retest, but because we have this is the last high that we have, so this would be the last line of defense. We call it the last line of defense. So we don't wanna trade above this level. If the trade has somehow make a new high, it's a shift of structure. So then we can continue to look for a buying position. But let me explain why we going to looking for a shorting position for the pound and the dollar, Australian dollar for this week. Okay, even though that we have a bullish price somehow that make a new high over here, but this is what the market maker wants to do. They will make the amateur traders think that the new movement is bullish because it has broken the previous high. But like I said before, if we look at the overall market structure, the daily time frame, we can see that the major trend is bearish. Okay, so that the price when price creating a new high, when price creating a new high, let's say a temporary new high over here, it's a move that the market stop hunt the buyers. They will trap the late buyers. This is no good position for a buying position. It's too early. Okay, if the pro trader will looking for more patiently wait more confirmation, maybe break this high and then the trend would be a bullish. But for right now, the major move we're looking for is bearish, looking for shorting position. Okay, so we have price reaching this area but does not successfully creating a new high, so we can temporarily say that the price is bearish. And when we look at the lower time frame, we can see that it's giving us more detail about this. Okay, so we have this move over here, a bullish move, and then price retrace like a break and retest. Okay, you can see there's a retest over here, and price has failed to make a new high, but we can see that the price witnessing a shift of structure. Okay, So price has have a shift of structure after it breaks the low, or we can say that it retraces a lot back to the support level. Okay, it had retraced like 100% level. It reaching its support over here, and then it bounce up, and in this area we can see that the candlestick, they are telling me that they're forming like a resistance. They keep rejecting the wicks. They have a lot of wicks and then keep rejecting, and then there's a variation of the bullish and bearish candles. So it's telling me that this area over here is a resistance. So where this is where the major traders they are looking for a shorting position at this time, and we can see that as a result the price has moved 70 pips, and it looks like continue to drop again with the head and shoulder pattern. So if the price has wrecked this neckline, okay, then we have the first TP over here at this level. So that's around 50 pips, but the ratio is 1-to-1, I think. Yeah, it's around 1-to-1, I think so. Yeah, it's really, so there's a chance over here, but for me it's really not that worth it because the stop loss is very high. This is aggressive stop loss, but if correctly we must put stop loss over here. So yeah, you can see that the risk and reward is not that optimized. Let's see if lower time frame. Okay, so lower time frame doesn't make any sense either. We can only scalp a breakout setup. Okay, so that is our first opportunity of trading for the new week. Once again, the major trend is bearish. Price has failed to make a new high. Price reverse back in here. Price looks like forming a head and shoulder pattern. Okay, so that is our first trade. So like with the previous pair, the power on the Australia dollars, I want to talk about this pair as well because the pattern are somehow, the structure, they are somehow 70 or 80% similarities. So let me break it down for you. Okay, so if we look at the higher time frame, we can see that this is the highest high, okay, and then it's creating and then the low, right? The low over here. Let me change the color. We have the low, and then the price has creating a new low. Okay, so we have we can see that the highs, they are getting lower, and the low, they are getting lower. Okay, creating a higher low here, and also this area, this low, I don't consider it as a new low because we can see the wicks, even though that's it might look like it breaks, but I think this is a fake out. Okay, so we can say that this is our last life defense. We don't trade about this level. Okay, we focus on the major trend. It's a bearish. It's a bearish, and so we need to deep dive into this area over here and analyze it. So if we look at the 1 hour time frame, we can see that the price is ranging. Okay, the price is ranging, and it breaks out. Okay, it breaks out like really solid. You can see that the candles, they are thick and very consistent, and this is where many amateur traders, they get trapped. Okay, because they think that the price has broken out, and if a shift of structure, somehow they might likely to go up. Okay, it looks very convincing, right? Price has break the structure. Price might retest. Price might retest again. We can see the variation, but then we can see that price has continued the dump because the major trend is currently a bearish. So if we enter the long here, it will be an aggressive move because there's no confirmation yet. And why that, we can see that the major trend is a bearish. We might forgot this. We were emotional, think that the price has broken out, and then maybe do a retest and then continue to pump. But the reality is that the major trend is a bearish, so we'll need to looking for a shorting position. Okay, so this is a fake out. And if we enter, it will make a really good trade, very good ratio. So that's for the similarity. If we look at the higher time frames, okay, lower. Deep down and detail about the Australian dollar and the dollars, US dollars. I will make it very detailed because I left the chart very stock. Okay, so let's look at the 4 hour time frame. What do we see here? So I can see that previously price is in the bullish trend because this is the low. Okay, this is the low, and we have these two low, right? Okay, these two low. Price has broken out, making a new high. So I will say this, okay, because I can see the retracement over here. So change the color, okay, and we have a new high, okay, and this is the low, and then the price has did again, making a new high, and right retrace, price breaking now again, creating a new high. So we can see that this is a bullish trend, an uptrend. Okay, an uptrend, but price somehow the bullish got weaker because we can see that the price has creating a new low, okay, creating a new low, So price has failed to creating a new high to continue the bullish movement. Okay, so we need to look at this is the low of this high. Okay, so this is the bullish move. So we can see that this area here, we call it the last line of defense. Okay, we don't want to trade below this level if we were looking to a buying position. So price will change the structure. The major trend will be more bullish, will be bearish if this area here, the resistance, the last line of defense is broken. So we look in okay, let's continue. So for right now, that we beginning this area, price is in a inconsistent move because it looks like that it's in a sideways or ranging area. But don't worry, because if we analyze detail, we can make a lot of money from it. Okay, first we look at this key level. I call this key level because there are many touches around this area. Okay, so from last week, the price somehow that witnessed a dump, and then it's reaching this area and it's forming a support, and then price beginning to move. But then remember the highest high, it's creating a resistance. Okay, so you can see that price, this is the inflation news, okay. So why does, even though that this is the solid bullish move, but somehow the price has failed. Okay, let me break it down. So if you remember in this area, when price has creating a new low, we can temporarily say that we're looking for a shorting position more. Okay, we have this move after making a new low, so this is where it begin. So we have this area, we will move this area below here. Okay, so we can see that price has reaching this area multiple times. First time, and then second time, and then on the third time it has failed. It has failed to creating the new high. Okay, so there are a lot of seller has pushed down the price once again into the area over here. So for this week, I can see that there is a opportunity for long position, because we identify that the price is somehow sideways ranging in this area, in this key level and this key level. Okay, so we're looking for a buying position, because right now if we look at the lower time frame, price, I can see that the price is forming like a support. Okay, and we're going to lower time frame. We need to look for a shape or structure on a lower time frame. So when price has break out this area, I believe that the move will be bullish, and then we can have our profit over here, because you know the wicks 1 2 3 4. So there are many traders there, they get stuck in here. So this is the trade that I'm looking for next week. Okay, so summarize. Price is in the ranging area. Price after touching the key level, price rejected in this area. So we're looking for the price in the ranging. Okay, price has retraced completely to near the key level. Price on lower time frame is about to shift if we're looking for the buying position. And so that's for the plan for next week for this pair. I want to analyze to trade is the pound and the yen. Okay, so once again the chart is completely empty. So on a daily time frame, it's hardly able to analyze the wicks, and the movement is not clear, as well as the 4 hours time frame. But if when I look at the 1 hour time frame, it shows me a little bit of information. Okay, so let's say that we have the low, right? The low, and then a high. Change the color. The high. So price retrace, creating a new high, right? Creating a new high. This is low. Okay. Price retrace back at here, and then broke out, creating new high, creating new high. So let's stop for a little bit over here because I want to focus to analyze detail about it. When price is creating a new high over here, and this is where the first movement where it begins. So point A, point B. So at this moment, this is the last line of defense. Okay, we don't want to trade below this level. We want to trade below this level. Okay, so it's a bullish movement, the back test. Okay, so if you can see over here, this is still a bullish trend, right? A bullish, an uptrend. We don't want to trade below this area. Okay, so if we're looking for to buy, the price must reacting above this area, this level. So we call this the last line defense on H4, and let's see what happened. Okay, let's say that we want to waiting for an entry for buying position. So we'll look at here. I hardly see an entry, but let's just wait and see how price react. Okay, if we draw on fibonanci, right, we still cannot see any entry bars. Okay, this I see a wicks over here, and I consider it might be a support, but there's no sign or signal yet to tell me to enter a long position. So you can see price retrace a lot. So this area has failed. So our last support in this area. Okay, let's see what's next. Oh, okay, so price breaks out below this area. Okay, so you can see that. Let's just wait a little bit. Okay, see what next, the next candle. Oh, okay, so a fake out. Price somehow goes below the area and then goes back. So if you a risky trader, we can make a long entry over here like a fake out. So okay, so this is our last support and we can make money. I believe this is why the news came out, the news about the interest rate of the Japan. Okay, so what next? Okay, we can see that price creating a new high, so this is the low has shift over here. So this is our last line defense. Okay, point A, point B, we're still in a bullish movement. So let's see what next. Okay, so the last line of defense has been broken out. Okay, you can see the price does not go back, but it has creating a new low. Okay, a new low. Okay, this is a new low. So we can see that it's a shift of structure into temporary is a, you can see that it's a bearish. So we refer to short rather than the buying position because the last line of defense has been broken. So I have this Fibo. We see a variation of bullish, up bearish and bullish, bear and bullish. So it's like it's creating a support area over here. So this is the bearish move. So that's why I have this Fibo retracement. So I need to find the level that the price might retrace and then find a shorting position. Okay. So at the time you can see that we have a clear bearish move, and the next thing we want to do is we wait for an entry at this level. We don't know which level that the price might retrace, but for now we have a few data to indicate us that we refer to short position rather than long after the last line of defense has been broken. Okay, so we might see what I want to see. I'm looking for attempt to create resistance. So this is the first sign. First, and the second time it might retrace to this area for an entry. So this is my take. Okay, so it might go somehow like this. So let's say that the price retraced into this 618 level. It is creating, it show that the variation of the candle. So it might be bullish and then bearish again, and then price mirror over here, and then continue. So first and then second, you might enter on the second. So that's it for this week. I hope this video fun for you.